the reality is, if you want to achieve any type of high level of success, then you have to be willing to do what the top 1 to 5% of people are doing. It's the same thing in trading. 5% of traders are profitable, 3% will ever achieve a prop firm payout, and 1% will ever make more than minimum wage. Yes, those are real trading stats that are released by some prop firms and brokers that come out and release their trading stats on the retail traders. I think you look at here at Top Steps Traders, out of 100,000 traders, 12% of them would ever pass a challenge, 3.5% ever took a payout, and 0.1% ever got on a live funded account. Now, yes, you could argue the fact that the type of people that take these prop firm challenges are younger people, 18 to 25 years old that might not have a lot of money and typically lack trading experience. So you're going to have a lot lower success rate. Okay, it's the same thing in day traders versus swing trader. Swing traders tend to have a lot higher success than day traders simply because of they're on a higher time frame, so there's less volatility. They are trading with less emotions as well because they're working a 9-to-5 job or going to school. They don't have the time to day trade. And just long term, it's easier to swing trade. And so your edge as a swing trader is actually larger than a day trader. And that's what we're going to talk about today. How do you trade with an edge in the market? The most important thing if you want to be a profitable trader is trading with an edge. Okay, and now before we get into that, I wanted to quickly talk about more odds and statistics, because if you look here, 5% of sports bettors are profitable. 10% of poly market bettors, which is a prediction market, are profitable, but less than 1% have ever made over $1,000. So if you ever hear people talking about sports betting, chances are they're a losing sports bettor. Okay, now for me personally, I am one of the top probably 2 to 3% of sports bettors. I have a positive edge. I mean, you look here, what is this, $600, which is nice. Okay, just betting anywhere from $10 to $40 per game. And over the course of a long run, the equity curve is up. And so I could call myself the top 5% of sports bettors. Actually, soon to be, probably by the end of the year, top 1%. So I'm probably one of the most qualified people that listening to this video that could actually talk to you about profitable sports betting and how to actually do that. That's more of a hobby thing that I do for fun, for kicks and giggles, all right? It actually helps me as a trader because you're always thinking about in terms of, do I have an edge on this sports bet long term? And so it actually helps me as a trader, and that's why I do it. It's not because of the money, it's actually a waste of time, but it programs my brain into knowing, look, I'm getting a payout of plus 150 while Las Vegas is offering even money. So statistically, if I took this bet 100 times, I will make money, okay? And that's the way that I think about my trading. If I take this trade 100 times, do I have an edge in the market? What is my edge, okay? And so that's what typically people lack, is an edge in the market. You'll hear people on YouTube, I've made these videos before, I'm not gonna lie, but I'm trying to stop making those types of videos. And you commonly hear people say like, look, all you need is this one chart pattern that happens every day at 9:30 and it makes me $9,000 with a 75% win rate. Only for you to trade it and you completely blow your account. You fail miserably. I totally understand. You're typically lacking an edge when you're just trading a pattern. And so you guys need to get away from this type of thing. And it's something that I'm harping on a lot more now this year, is make sure that you're trading with an edge. What is an edge? That's what we're going to talk about today. Because in order for you guys to be profitable, you have to trade with an edge. So let's talk about this. What is an edge? Okay, an edge is simply a higher chance of one thing happening over another. Excuse my writing. You guys should be writing this stuff down, by the way. Okay? Let's make this a little bit bigger. What is an edge? An edge is simply a higher chance of one thing happening over another. Okay, and that's how I think about my trading, is if I was to take this trade 100 times, will I make money? Okay, and now typically, like I said, on YouTube or social media, you see people talking about technicals, because that's what sells. That's what's easy to program into your brain. But if you actually want to make money from this long term, you have to understand fundamentals, sentiment, personal edge, technicals, risk management. You have to understand these 4 to 5 things because that is your edge as a trader. And that's what I'm going to describe to you below now. And we're going to circle about like, these are the things that go into my head when I'm taking a trade. And then we're going to go over a couple trade reviews and stuff like that I have for you guys, breaking down, this is my edge in this trade. This is why I took it. Okay. I don't mind losing this trade 10 times and I'm okay with it mentally because I know I have an edge. Okay. So let's talk about that. And let me quickly draw this out. So there are 4 components to an edge. Honestly, probably 5, but we'll get to that at the end. So let me draw this out. It's a big circle that I will consider. Okay. The first thing, you guys should write this down. Fundamentals. I got to make it look pretty for you guys so it's easy to read. Fundamentals is one of the most important things that you need to consider when trading an edge. Okay. This is going to consist of earnings, GDP, which is gross domestic product. You know, how much are they producing and selling? GDP is one of the most important data that people look at every single month that gets released. And these news events get released every single month. Like you guys are aware of GDP, CPI, inflation. Is inflation going up or down? Bank rates. Is the Federal Reserve of that country increasing rates or decreasing rates? Okay, what else? Retail sales. Unemployment, is unemployment going up or down? Are the retail people spending money at shops or not spending money? And manufacturing PPI or PMI. Okay, these are typically the things that go into your fundamental analysis. These things will affect price long-term direction. Now you'll probably see GDP numbers come out and that makes the market go crazy for the day. All right, it could cause the market to sell off. And so I see a lot of people trying to like sell the stock market. I'm like, why are you trying to sell the stock market? Like they just released horrible unemployment rates, which is going to give the Fed the okay most likely to to decrease interest rates, which is going to create a bid to the stock market to the upside. So why are you selling the stock market right now? Right? And so I see a lot of these trading mistakes and we'll talk about them. The next thing that I'll consider, sentiment. Sentiment is going to consist of COT reports. I've actually made a video talking about this. It's a great, like 45-minute video breaking down hedge funds and large institutions. Are they buying or selling? And you can actually see, are they adding to their position? Are they decreasing their position? Are they adding shorts? What are they doing? Are we trading on the same side of the banks and institutions? So sentiment will be COT reports. Wars, right? Israel's got beef with everyone, you know? God damn. What's going on in wars? Ukraine, Russia, that's going to impact oil. If you're like, no, I'm a technical trader and I trade oil, how the hell are you not following Ukraine, you know? And Israel, like you gotta be aware of this type of stuff. You'll never make money long term. Even if you don't want to do that, you should take an interest in this because this is what you want to do to make money, okay? Trade wars and just trade in general. Elections, general market consensus, right? Excuse my spelling, it might be incorrect, but general market consensus for the day is gonna be like, what are the general public thinking of this market condition that we're currently in right here, right now, today? You know, is everyone buying? Is everyone selling? Is there any problems? Is there anything on the watch list that we need to be careful of, right? What's the general conclusion that everybody's thinking about this market? Start thinking about reports, retail sentiment, wars, trade, that type of stuff, right? And then we have technicals, okay? What technicals is going to be is one of the most common things out there because it's the easiest to talk about. Technicals, let me go like that, duplicate. Now this is going to consist of your indicators, price action, just general tech, you know, support and resistance, supply and demand, Fibonacci, moving averages, that type of stuff, right? Chart patterns, head and shoulders, engulfing, and maybe level 2 dome/heat map. Because I like to use the heat map. Some people use the heat map, the level 2. This is going to consist of technicals. Now, this is what primarily people are talking about on the internet because it's the easiest to learn. But if you think you're just going to trade with technicals, your edge as a trader will be very small. Okay, this is why when I start trading, I consider technicals, fundamentals, sentiment. And lastly, one of the most important is personal edge. Okay, that's what I call personal edge. And this is going to consist of time and experience. The thing that nobody can teach online, not even I. But time and experience is a personal edge because there's a lot of times that I see traders taking trades and I'm like, man, why are you taking that? I mean, that's just not a good trade. But I get it. It's a 10 out of 10 setup, but I would avoid it for these reasons. Okay, and we'll talk about that. All right, time and experience is one of the most important things, and it's one of the biggest things that you can have to a trading edge. But it takes time and experience to learn that type of stuff, right? But this is why, you know, you have a coach and that type of stuff. Okay, so experience, discretion / let's just merge them all together as a personal edge. Probably shouldn't, but time, experience, discretion. Build a plan around your strengths and weaknesses. Building your plan around your strengths and weaknesses. Everyone's got their own strengths and weaknesses based off of their own personality, how they trade, how they view the markets. Are they a revenge trader? Do they tend to overtrade? So if you come to me and you're like, I revenge trade a lot, cool. That's not an issue. Let's stop trading after a losing trade. Okay, so if you lose the trade, stop trading. Right? And so you implement these rules to stop you from making bad habits. It's a good book. I think it's called Atomic Habits. That's a good book for you guys to read, and building your life around your strengths and weaknesses, right? How to remove bad habits, how to start good habits. So that's a good one. And then of course, I mean, you can't really have a personal edge without considering, you know, the gym / health / sleep, right? Like, what are you doing outside of the charts? You know what I mean? And so actually it's one of the things that I say is there's no naked girl at the end of the tunnel congratulating you on becoming a profitable trader. It's a never-ending journey of trading, journaling, reviewing, and adapting to the current market conditions. You know, market conditions are always changing, so you have to be adjusting your trading plan and your style of trading to the current market conditions. If you don't, you'll never make money. Okay, and this is why it's important to have an edge in the market, and this is why I will consider these 4 things. Now, the most important, okay, without it, you will never make money. Risk management, okay? Without it, I don't care how everything else is. You have fundamentals on your side, sentiment, personal edge, technicals. Without risk management, you will never be a profitable trader. If you have risk management, you'll be a break-even trader no matter what. The problem is you lack an edge in the market. Okay, now what does that look like on the charts? Because like we said, so many people are caught up looking at technicals. It's reacting off of support. And so I want to go through a couple trade reviews and talk about them. I want to go over like 2 or 3, and I want to show you this is what an edge looks like. Okay, I'm going to go over 3 to 4 trade reviews so that you can see, because I see all the time people are like, it's head and shoulders. You're not going to have a significant edge just relying off of chart patterns. You're not. So when I look at something like this, the sun's going down. Sorry if it's screwing up this vision. Let me see if it is. Not too bad. Sun's going down. I'm making this video late. So on crude oil, okay, this is a crude oil trade, $900 profit. So why was I selling? Okay, technicals. Price right here is coming back up into a level of supply. So we're coming up into a level of supply. We're reacting off of a nice resistance line. We're in a downtrend long term. Okay, I also understand OPEC fundamentals and sentiment. OPEC is coming out with increasing oil production, putting more oil out there. So you got OPEC increasing production. You got potentially Russia, Ukraine talking about peace agreements. You got OPEC coming out saying, look, the production of what we're producing for oil, the demand is not there. Okay, this is all negative stuff for crude oil. So you start to see crude oil sell off to the downside, right? So I have prices inside higher time frame supply reacting off of resistance. I have long-term sentiment to the downside. I have a beautiful supply zone here, how prices go up. You see this? Kind of got higher highs, higher lows, then we range bound, and then we sell off. Okay, now we're making lower lows and lower highs. I'm selling back up into supply, right? Back up into supply. And that's why I get short on a setup like that. If I take this trade 100 times, I'm going to be profitable. I could lose this, okay? You look at another trade. S&P 500, 1 hour time frame. Fundamentals and sentiment. Today, the CPI, inflation data, and the government shutdown came out lower than expected, which is giving the Fed the okay to cut rates. Okay, so we actually had this market falling during this time. You can see this right here. The Fed's going to cut interest rates, create more easy money. Stock market tends to go up on this type of stuff. Okay, so we got the market falling initially, coming back down into a level of demand that I really like. It's a qualified demand zone, strong and balanced, taking out opposing supply zones. You're buying the stock market. That's a good investment. You're trying to swing along the stock market. I mean, you can't really go wrong in a market that's just higher highs and higher lows, making all-time highs. Okay, I noticed on the not the COT reports, but on the heat map, that secretly there is a large buyer stepping in, 1,000, 1,000, 1,000. And then over here, like this guy was buying 12,000 contracts during this time period right in here. I'm circling. So I know there was a large buyer coming in with 12,000 contracts buying this market with a negative delta of 21,000 contracts. So I know eventually these guys are going to have to close their position and bid this market to the upside. So I have all of these things to factor into why prices are going to go to the upside versus to the downside. I understand I could be wrong. There's no problem. Okay, there's no problem. But if I take this trade 100 times, I'm going to be profitable. Okay, it's the same thing on like, I don't know, I could look at a lot of these different trade reviews, like the Canadian, you look at the COT reports. I want to look at COT reports because I did mention sentiment COT reports, right? And so I look at the COT reports. Well, the Canadian, they went from 78,000 shorts to 91,000 shorts to 100,000 shorts to 125,000 contracts short the Canadian. These guys are adding to their shorts. Long-term technicals is downtrend. So daily time frame, lower low, lower high, lower low, lower high. We're pulled back into supply. I like looking for selling opportunities. The banks and institutions are adding to their selling, to their shorts. I know as a Canadian, the economy's crap. Their Canadian dollar is not good. So I look for sells. I sell back into this qualified level of supply, right? Beautiful level of supply with a strong imbalance, letting me know a lot of sellers took control, and I sell to retest back into that level of supply. And so you can start to see why it's important to start considering fundamentals, sentiment, technicals, personal edge, right? In order to actually have a trading edge, because most people aren't trading with a trading edge. And if you don't, you'll continue to lose. Let's look at a bad example. So let's go to our Wednesday trade review meeting. Like Alan, again, this is a trade that has a beautiful setup, and I was agreeing with his technicals and his fundamentals. And I'm ripping into the guy. Why are we taking one-to-one trades on a trade setup that we deem as a very high probability trade setup? If you know this is an A+ trade setup, why are we taking one-to-one trades? Okay, I understand if it's a very aggressive trade, you want to dial back the risk. You want to go for a lower reward. But this is an A+ setup according to you. Why are we not increasing the reward? Why are we not risking more on this trade setup? This is what he has to do, and he'll profit more on his positive edge trades, on his A+ trades that have a very high expected positive return. Okay, I think there was a trade that I wanted to go over. This is a short setup, beautiful short setup by this guy. Price pulling back into supply, beautiful level of supply here. Price is pulling back, nice resistance, beautiful resistance, reacting off of supply, but he's selling a 15-minute supply zone. Why are we selling a 15-minute level of supply in a market condition that 56% of the days it's a very bullish day? I mean, I say it right here. Instead of me remembering what I said, I would agree it's a very nice technical setup, but given the current headlines, the US government is about to reopen. The China trade deal, the China-US trade deal officially went through today, and the Mag 7 stocks are all catching a bid today. This is not the market that I was short on the 15-minute, right? And that's kind of what I'm saying. Like, I wouldn't short this on a 15-minute time frame. I think statistically long-term, you're probably going to lose money. I think this trade setup has a positive edge, but in a market condition like this, it's not a good trade, okay? And keep in mind, he could win money on this, and I would still say the same thing. I would still say, why are we selling this? Now, if he can come to me and rebuttal me and say, no, you're wrong because of this, then okay, I'm cool. I got my opinion, he's got his. But this is the problem when I see a lot of people's trades, and I ask them why'd they get in. Okay, they're like, I don't know, it's demand, or I don't know, it's support. The market doesn't care about your support. Okay, it cares about what is driving this market. That's the question that you guys need to be asking yourself. Do you have an edge in this trade setup? What is an edge? An edge is simply a higher chance of one thing happening over another. And you need to consider fundamentals, sentiment, personal edge, technicals. This is a really good technical buy, but is it lining up with the COT reports? What about the fundamentals? This will increase your edge to be a profitable trader. This is what the top 1 to 5% of traders are doing. Yes, some people will weigh a lot more maybe on technicals versus sentiment or fundamentals. They'll really rely heavily on that heat map or level 2 dome, while somebody will not. Okay, but for you to purely rely off of technicals, it's not good, because you have to consider sentiment and what is driving the market for the day, not just a support and resistance line. And if you don't do these things in your trading, you're never going to be a profitable trader. And so this is why when traders, work with us in the Moneyball trading program, I harp down on this so much. Here's the core strategy. Okay, but I'm actually writing a book. It'll be done by the winter time of 2025. But I'm going to have a full fundamental book for people of what is fundamentals, GDP, what does this look like on a chart. Yeah, I'm going to add a whole, it's going to be great. I'm pumped for the traders in the program, because I'm changing the whole course material and building the whole course around the core strategy. Again, I'm going to be redoing the whole course material, but writing a book on fundamentals and sentiment and about what this looks like on a chart. How do we trade it? Is this a good setup? Should we be risking more? It's going to be fantastic. And that's really what we try to do in the Moneyball trading program, right? Is ask ourselves, do we have an edge in this trade setup? Yes, we do. Then we take the trade. There's no questions. You're emotional about the trade, you're risking too much. It's that simple. If you're emotionally attached to the outcome of this trade, then you're risking too much. I would encourage you to dial back the risk to something that you can afford, that allows you to take this trade setup that has a positive edge in the market 100 times, 10 times, 20 times without you losing a sweat. That's what I have to say, guys. I really appreciate if you guys like this video. If you guys have any questions on this, let me know in the comments below. And I would love to have you guys part of the Moneyball trading program. All right, if you guys wanted to check that out, I'll leave that in the description below for you guys to join, and so that you can start trading with a positive edge. I will see you guys in the next one. Cheers. Bye-bye.